Looking at buying a home in Lancaster County, but think you have to save up $1 million for a down payment? The good news is you don't. In this video, I'm going to be answering the 7 most asked questions I get regarding down payments and how much money you actually need to buy a home in Lancaster. Question number 1. Do you need 20% down in order to buy a home? Well, the good news is no, you don't. And in fact, actually, there are plenty of good programs to help you put far less than that down. Number 2, what is the minimum amount I need for a down payment? Now, depending on your income, debt, credit score, there are a number of different programs that could fit you. The minimum you need for a conventional is typically 3%. However, there are some local lenders who will do 0% down. For FHA, it's going to be 3.5%, although if you have a lower credit score, it could be 10% down. And if you're looking for other great 0% down options, you also have VA and USDA loans as well. Now, for USDA, you have to make sure that you're in the right particular area to qualify for that loan. And there are also some other caveats to these as well, which can make it trickier to get financing approved. Number 3, does a bigger down payment help you get a lower interest rate? The answer is sometimes. Now, if you have a lower credit score, if you're putting more money down, that is going to help you get a better rate. Now, if you're a first-time home buyer, you might find that actually putting a 3% or 5% down option is going to give you a slightly better interest rate than putting 10 or 15% down, for example. This means that even though you're putting slightly less money down, you may find that your monthly payment is similar to putting a slightly higher down payment. However, ultimately, it's really going to come down to your credit score, the loan type, and what the current market conditions are doing. Number 4, can you do a low down payment option and not have to pay mortgage insurance? Well, the good news is if you're doing a conventional loan, for example, there are some great programs that enable you to do a 0% down with no mortgage insurance. So that helps you save even more money each month. For FHA loans, you are going to have to pay mortgage insurance, unfortunately, for the lifetime of the loan, unless you're putting 10% down or more. Now, I say lifetime of the loan, you could always refinance to a conventional loan at a later date. So even though it's forever, it isn't always going to be the case. And if you're getting a VA loan, the good news is they also don't have any mortgage insurance either. Number 5, are there down payment assistance programs in Lancaster? Yes, there are multiple different programs that you can apply for. There are a couple of local lenders that do a 100% financing conventional with no mortgage insurance. Now, you are going to have to qualify for these. So depending on your income and your credit score, you may not qualify for some of those products. There's also something called PHFA, which is a grant. So you basically apply for it. Again, there are going to be income limits for each family size. So do make sure you speak to your lender to see if you qualify for these programs. Question number 6, what does a typical example of this look like? Well, in Lancaster, the average home price is around $350,000. So if you're doing 3% down, your deposit's going to be $10,500. If you're doing a 5% down, it's going to be nearer $17,500. If you're able to qualify for one of the 0% downs, it's obviously going to be 0, which is good. However, you're still going to have to pay closing costs, which are typically going to run between 3 and 5% of the price of the home. If the home has been on the market for a while, you can even ask and see if you can get a credit from the seller. I've had a couple of buyers be able to purchase homes for around $5,000 to $10,000 all in. But there are multiple different ways of being able to get those closing costs down further. Number 7, is it better to buy now or wait for a lower interest rate? Now, what I would say is home prices have been increasing steadily over the last few years. So every year that you're waiting, you're actually losing the opportunity to get equity. What I would say is if you're someone who thinks interest rates are going to continue to drop quite a lot, you're better off buying a home now, getting in at a lower price before prices increase further. And then that way you're able to refinance down to a lower mortgage payment. Because all that's going to happen is as interest rates drop, especially if they drop a lot, what we're going to find is affordability becomes easier. More people are able to borrow more money, and this will kind of push home prices up slightly. So any savings you may have got by a 0.5% interest rate drop are actually going to be offset by a price increase of 2 to 3%. So ultimately up to you, but I would say getting in the market and being able to potentially refinance at a later date. And if you don't think interest rates are going to go down, then guess what? You may as well buy now because prices are probably going to go up anyway. Now, really, before you go look at homes, you're going to want to get yourself something called a pre-approval. And we're going to talk about what that is in this next video. And this is just a way of finding out how much you can actually afford and make sure you're looking at homes in your price point.